Hi, I'm Anthony Parent of Parent LLP, and today I have a guest, Robert Hanson, our lead international attorney.
Hello.
Hello, Robert, and today we are talking about something that seems sort of ominous, and you know, the news really didn't surprise me, but when I saw it, it surprised me.
Right.
Because it's just been around for a while, and we've done so much of these, it's sort of part of us, right? And the IRS announced, the news is the IRS announced the end of the OVDP, can't say program because you're being redundant if you say that, the end of the Offshore Voluntary Disclosure Program, September 28th,
Right.
2018. Yeah, so Robert, how surprised were you that this happened?
Gradually and then suddenly, right? We all knew, everyone kind of knew, you know, you do these for enough years, like this is not going to last forever.
Right.
I mean, there's always been a voluntary disclosure, you know, set of procedures that the IRS has had. Right. But this is the offshore voluntary. I don't know if that was...
Well, and all the other ones ended. The 2009 one had a set end date. The 2011 had a set end date. It was the 2012 one that sort of said, okay, we don't have any set end date, but we can end it at any time.
Well, the first two were almost like trial runs,
right?
Like the beta of this. The 2012 version seemed to be one they were kind of happy with. They tweaked it in 2014. Some people in the IRS said, well, we had a new one in 2014. That was never... There was continuity.
Yeah.
You know, because 9 ended, 11 ended, 12 kind of
just sort of morphed into something else
with some additions. So not very surprising because they've had a program for voluntary disclosure for offshore stuff for close to 10 years now.
And I think if you are the person who needs an OVDP and you didn't do it, you've made up your mind. You said, okay, I'm just going to roll the dice. And I think you've talked to people like that, right. And I've talked to people like that. And it's not my job to tell you, you know, I don't have a crystal ball. I'm just sort of trying to manage your risk and give you some advice. So I know there is a lot of people out there who really should have used the OVDP, and they've sort of forgot about it. So I would just say, if you are one of those people, and to quote Rush, I think if you choose not to decide, you still have made a choice here.
That's right.
It's going to be gone. You won't be able to do it. And really not big, you know, and when you look at the numbers, and I didn't have their recent 2017 numbers until the press release, but, you know, back in 2011, you know, you were just doing, you know, that's all we were doing was the OVDIs and OVDPs in 2012. We didn't do any streamlines because the rules were so rigorous. No one qualified. And then in 2014, that's where we had our shift. Like more people became streamlined, less and less OVDPs every year. And last year, maybe we had 10
overall.
10 new ones overall, I would say. And most people came in thinking, oh, I need to do this. And we talked to them like, no, you're really more of a streamlined. And that was a pretty common thing.
Right. A lot of people coming in there thinking, and then look, the IRS, I think we've said this before, the IRS does operate, I think, on a healthy dose of, you know, fear and perception.
Yes.
You know, oh my God, they're going to come. I've read how many people, it's like when you go on WebMD and you're like, I have all of these diseases now. Yeah. Same thing for taxes, right? People would read online articles like, oh my God, that's me. They're coming after me and things like that. It's like, well, no, from our experience, our professional opinion, I don't hear any willfulness on your part, any real intent. Yeah. You got some bad facts, but hey, who doesn't have bad facts? That's why you got to do the OVDP or do a Streamline.
That's why I think that's a pretty good analogy of the WebMD, because that's always what when I go on that website, it's like, why is it I always go immediately to the worst case scenario, no matter how unlikely it is? Well, yes, this is a symptom of something very serious, or it's a symptom of an infection that can be healed pretty quickly.
I think like every disease has like headache as a symptom. Right? It's like, I've got fatigue, I've got a headache. Oh no, it's definitely this thing.
So then I would say the analogy is just because you did something wrong on your return doesn't mean you're a criminal. So that's the same sort of thing.
Right.
No, it actually takes quite a bit to do that. And
I mean, I've had other attorneys, like New York attorneys, who made a mistake, like left off some interest income.
Oh yeah, right.
And they said to me, like, am I about to go? This is someone who I know, who like sharp guys.
Yes.
You know, and like, oh, am I going to get audited? And I, like, no, you're not. I mean, you made a mistake, right? You just pay the taxes. I mean, the amount of investment the IRS would have to put in to really kind of go after someone for that, not worth it. It's not worth it. I mean, keep in mind that when the income tax first came around, 1913,
1913. Yep.
The plan was every return was to be audited.
Right.
Every return was to have someone read it over and then maybe contact you if something was off or shenanigans. Now, to be fair, at the time, it was a brand new thing. You know, the IRS has a history of dealing with brand new laws and brand new procedures and having to really put some resources in to work out the kinks in real time. But that was the original plan, to really review everything, and they couldn't do it.
Well, because the income tax was originally only supposed to hit a few people each year, just, targeting, very rich people. So it was a manageable workload. And then they said, well, this is money after all. So let's sort of expand who this applies to. So now then they made it impossible to examine every return as originally was contemplated. So now what does somebody do when they let's say they're watching this video.
Right.
It's after September 28th, 2018, and someone's watching this video saying, oh my God, I missed out on the OVDP and I'm going to go to prison. Oh my God, why didn't I see this video a day earlier?
Right.
And to that, you keyed on it before, but you said there's the Standard Voluntary Disclosure Program, right?
Yeah, there's still a Standard Voluntary Disclosure Program, but at that point, my guess is you're just going to open yourself up to an FBAR audit.
Yeah, that's basically, and that's the way I would look at it. And also an audit on any of your 8938, 5471, 3528, all of those. So the way to think about it is that the OVDP was the OVDP program was two things. You had the pretty much elimination of a criminal charges, and you had a predetermined penalty regime that you knew what it was going to be going in ahead. So now with the removal of the OVDP, you still have the voluntary disclosure. Again, the IRS is mandated by Congress to have a voluntary disclosure program. They still have it. So it's back to the old process where we would write the letter to a local CID to say, hey, are you investigating this guy? Is it okay if he makes a voluntary disclosure? And the thing is that, for them to say no, unless they're investigating you already. If they're investigating you already, it's going to be kind of hard to pull you out of the fire.
Right.
Those are people who put their time into the case, and for them to say, all right, well, I've put 40 hours into this case, and this person called with a sob story, so let me abandon all my work and go work on the next one. Now, that's not how it works, and that's sort of the thing, and that's like the number one understanding of how the federal criminal justice system works. If somebody put effort into researching you, it's very hard to get them not to continue. But if they didn't put any work into you, and this has happened with us, we've called and somebody was under investigation. I had a call that went something like this to say, okay, yeah, we have this file here, but no one's put any work on it. So if you say you're going to make a disclosure, that's fine with me. And that's it. And by making that call that day, it was probably a difference of a day that person was able to go through and completely dodged a bullet. And the fact was he was 100% non-willful, but the IRS, just because, and I think this is something when I used to do a lot of criminal defense work, and I would do a lot of habeas corpus actions. That's basically someone arguing the ineffective assistance of counsel because, well, in this situation, so many times, well, I was found guilty of a crime. And, well, this one I didn't actually do. It's the common thing because otherwise they take the plea deal.
Right.
So the criminal will think the person accused of the crime is like, well, this crime I didn't do, so I know they can't prove it on me. So I'll just go in, say, no way, not guilty. And then there they are, shocked. Wait, how did you find me guilty? I actually didn't do this one. But there's a lot of people in prison who learned that lesson the wrong way. Just because you didn't do anything, if the machinery of investigation has gone, that is a lot of inertia. One little person is going to have a hard time stopping. So that's really the way to think about it. So you still can avoid it. And then again on the, so now I guess after that, you're just going to file 6 years of returns and FBARs and then wait for them to audit you. Maybe they will, maybe they won't.
Yeah. I mean, well, there's still the Streamlined procedures available. We don't know when they're going to be going.
But if you were actually willful,
if you're
can't
willful,
do the Streamlined. Right. Yeah.
Or if you, So at this point, I think would have to be, look, people who I've been putting through the OVDP since 2014, right? Originally, it was just the OVDP. Everyone went into the OVDP. And the only way to differentiate yourself was to opt out. Right. People who were guilty stayed within the procedure guidelines. People who were not guilty, quote unquote, went into the opt out. In 2014, when the IRS expanded the streamlined filing procedures, almost in a sense created new ones because the old ones were so restrictive.
Oh yeah, right.
I don't think anyone did them.
No,
and not for
we
us.
didn't. No, we did.
Now people were self-segregating. The guilty, quote unquote, went into the OVDP, and the innocent went into the streamline. Now people who had real willful intent, or people with sufficient bad facts that you would say, you know what, I mean, you know, you're on the bubble, you're on the fence here. I understand that you're non-willful, but look, you're an enrolled agent, you're a CPA maintaining his accreditation,
yep.
You're an attorney, you know, you're some type of other tax professional.
You work at the IRS.
You work at the IRS. You know, some of those
that does happen. By the way,
some of those people would say, I didn't do it on purpose, and because look, you went through law school, I went through law
yep.
school, I did tax in law school. I know you did some as well.
I did tax as well.
You did taxes. I don't think I took an international tax policy class. I don't think we talked once about FBARs.
Yeah, no, it doesn't really.
So it really doesn't come up at all.
Right.
And so you could be a professional, an accountant, CPA, etc., who really didn't do this on purpose,
mm-hmm.
but the IRS is gonna look at you and say, no, you could have known, should have known. Those people would still go into the OVDP.
Right, and I think that where I would still, and I would spend a lot of time with attorneys, and I think that's it's a huge client base of us as attorneys, and they sort of examine, and it's hitting on something you were touching before. Criminal law is on the bar exam. I can't think of one bar. It's on the multi-state bar exam. And it is a required course, I think, at most law schools, criminal mm-hmm. law. And then criminal procedure is an elective. And you would think an attorney would retain knowledge on, well, I need the state of mind necessary to perform the crime. Mm-hmm. And I think on some level they still remember that. And that right. if somebody came in and asked them for advice, even if not a criminal attorney, they could kind of remember, oh, wait, there's two parts of the crime, the acting part and the mental part. They could remember that. But when it's you, that ability to analyze, to say, oh, wait a second, I didn't really have the mental state, it sort of goes away. You're just going to say, oh, my gosh, I'm such an idiot. And I would say this about our disclosure clients. Nearly everybody is incredibly educated and incredibly sophisticated. The reason why you have worldwide income and assets is because you do things. Mm-hmm. You do things that the average person can't do. Therefore, mm-hmm. you're sort of exceptional. So that's one of the things, is the biggest challenge that we have with people, our clients who are well-educated and incredibly brilliant, is that we're trying to convince them you actually can't be expected to know everything about tax law. Not anyone who practices tax law knows everything about tax law. There's nobody at the IRS who knows everything about the IRS. It just doesn't work that way. Yep. It's too big for any one person to truly understand. Mm-hmm. So trying to think, and I think that's a challenge that you and I have, is trying to explain to people, you really don't need that full OVDP anyway. Really, the Streamlined is the thing for you. You made a mistake. And, sometimes convincing people not to be their own worst enemy.
Right. Yeah. But going forward, those people who have those kind of more specific backgrounds in accounting, tax, what have you, they're going to be in a little, interesting situation, mm-hmm. right? Because we would say, okay, fine, OVDP, if you get hit with an audit, if you do Streamline, I believe you, you didn't mm-hmm. do it on purpose. Mm-hmm. But if you get hit with an audit at the end of a Streamline filing, which was always on the table, mm-hmm. then then you look at some hefty penalties given your situation. Maybe we do OVDP to kind of as a safer route. People
want to a known answer that's not great.
Right.
It can be better than an uncertainty, and sometimes that's one of the things that we would weigh. Now we just sort of lose that option on the table post September 28th. Now you have spoken with mm-hmm. An OVDP, I guess, coordinator.
Right.
And he said some interesting things to you.
Yeah, so despite the tumultuous nature of the federal government and the constant hand-wringing about the IRS budget, they're still doing stuff. And this international stuff is still on their radar. So what they're looking to do is they're gaining the ability, from my understanding from this conversation, they're gaining the ability to be able to kind of check your FBAR filing. Keep in mind your FBARs are filed electronically and go to a separate, go to FinCEN. They don't go to the IRS. The IRS does not have ready access to the information filed in an FBARs. They can get it, but they got to request it like anybody else does in the federal government. They're going to be able to, they're getting the ability to access that information. And for a lot of people who we mentioned a minute ago who said, you know what, I don't know if I want to do an actual disclosure. What if I just start filing correctly going forward? Are they really going to find out? Come on, this is only a small account.
Yep.
Are they really going to find out? And they just, okay, fine. And look, you can lead a horse to water, but you can't make him drink, right?
That's right.
We can tell, like, look, my legal advice is you should come forward, fix the past mistake, and go through one of the programs, pay your 5%, pay your 20%, if needed.
Or 0%.
Or
if you happen to
0%,
live overseas,
right.
Yep.
Now, the IRS has now labeled those types of disclosures as silent disclosures.
Oh, that's the silent.
The silent disclosure is you didn't fix the past.
Okay.
You just started filing compliantly going forward.
Yeah.
And now the IRS is going to be able to flag those. I don't know how
well. They did talk about, and I think it was in 2014, that they identified 10,000 soft disclosures that they were going to start auditing. And I recall thinking, okay, that's going to be a huge sort of, we're going to have a bunch of people calling us. Like, yeah, I made a soft disclosure and being audited now. Those calls never happened.
Yep.
And the IRS actually didn't start those audits, but sort of putting your conversation with together with that, they have the database of people, and I think this is something that people don't understand, that your FBAR does have a statute of limitations, and that's a 6-year statute of limitations from the date that it was filed. So some people
from the due date.
From the due date, right. From the due date, not because you didn't file it, right? So for some people, they're thinking, okay, my biggest threat is this FBAR penalty. I just got to wait it out. Well, hold on a second there. It's like, that's true on the FBAR. That is very true on the FBAR. But you still might have a few problems. And one of those problems is the Form 8938.
Absolutely.
The Form 8938 was created by the HIRE Act of 2010. It's part of the Foreign Account Tax Compliance Act. It requires you to file a statement that's really equivalent to the FBAR. It has additional things on there, but the purpose of it was because the IRS really didn't have access to the FBAR. But that 8938 is a form they certainly do, and Congress put in that thing that the IRS loves to have on foreign informational returns. That if you don't file an 8938 or you make it substantially incomplete, the IRS says, okay, well, that's a $10,000 penalty per each occurrence.
Per year.
Yeah. And they'll assess multiple years. But there's another little trick they have. They can audit your entire tax return.
Yep.
For not this one thing. So that is where the IRS indefinitely, right. So they could do this in 2030?
Yeah.
So what I thought, because there's a few soft disclosure audits I heard of, I can't say there was none, but there was not very, very many. My assumption is the IRS is sort of segregating which ones sort of they have this indefinite time to get to, give that lowest priority. Who has a statute that's coming up quickly? Let's get to them. And that's the problem. Now, here's something else that's interesting, though. If you did make a soft disclosure years ago and you're like, oh, boy, am I going to get it? You actually can make a streamlined disclosure to clean it up.
You can still go back. I remember I spoke with Attorney O'Connor on this earlier, talking with someone who filed the returns, because some people just get so freaked out. They hear the news. It comes across the wire, and they go, oh, my goodness, we've got foreign accounts. Let's just report it and file it. And then after they filed it, they have a kind of a moment of, everything kind of settles down for a moment. You get some clarity again. And you look into, oh, wait, I could have done this under a streamlined filing. Oh, no, I just filed this. I've done a quiet disclosure.
Right.
The IRS does allow that you can go back and just basically say, my bad. Here's my non-willful statement. Here's all the returns. I made some numbers wrong, some bad conversions, and I'm cleaning it up, and I'm very sorry.
Right. And now with the Streamlined program, I mean, I'm a pretty big fan of it. I wish there was a 0% penalty domestically as well, but that 5% certainly beats the 27.5%. That for so many people, when they're doing this, they're thinking of, I'm losing my track a little bit there. I went off that way. Bring me back. What were we talking about?
Well, we're talking about. Oh God, now.
Now you did it too.
I did it too because I was waiting.
You were that just got a little off. There's something maybe in the coffee today.
Well, we were talking about how now the IRS has, if you've got unfiled information reporting forms, 8938 is the least of it. But don't forget it. You know, people who have foreign businesses, foreign partnerships, foreign trusts, foreign pensions, which are treated like foreign trusts, all those have their own separate information reporting forms. Technically, these aren't tax forms, meaning they don't generate a number that goes onto your 1040 that says, here's extra money I owe or extra income I should be taxed on. They do a little bit, but technically they're the information reporting. All of those forms, as a result of the HIRE Act and FATCA in 2010, all of those forms told the statute of limitation indefinitely. So everything on the return, if that form is unfiled, everything on that return can be re-reviewed by the IRS, even beyond the statute limitation of the normal 3-year statute limitation for them to assess you something new. So you can get hit with, and it's not even necessarily like, you know, the results of the audit you got to worry about, but you got to go through the audit now.
Yeah,
and they're going to ask for everything.
Yeah,
you know,
it's going to be expensive.
It's going to be expensive.
It's going to be really expensive. The time really adds up. You know, can really add up.
You either going to do it yourself, and you're not an expert, and it's going to overwhelmingly take over your life.
Yeah,
and you're going to maybe say things or put things in a certain light that's not flattering to you.
The other situation is you could have your CPA who filed your returns represent you, but you sort of have a conflict of interest there. And this is unfortunately something we see happen where the CPA is concerned about, oh boy, how did I make this mistake? Well, you know, the client didn't tell me. And it's like, well, that's not really helping. That's not really helpful. So I don't think, you know, if you were a CPA, look, you could have made a mistake and it's okay. You know, there's lots of CPAs. I know a few CPAs who just won't touch anything international. Yeah. They just say, nope, I don't want to know it. I just only do domestic stuff. And I think that's a pretty good, you know, that's a pretty good way to handle it because it's just something you don't want to dabble in. You did remind me of my point I wanted to make, by the way. Thank you very much. The great point about the Streamlined program is that we only do 3 years of, say, these informational returns. It cleans up all the open ones, too. The IRS sort of says, okay, we're just going to treat all your other ones. We're going to close them out, so you don't have to worry about them anymore.
Basically, so if they ever look back at your returns and say, "Hey, wait, we got forms that are on file potentially." Oh, okay, I see that he's got the 3 years marked for going through Streamline. Okay, everything looks good on his face. We'll leave it alone.
Yeah. So this
now with the silent disclosure issue now and quiet disclosure issue, if you do those because OVDP is going away, you know, you're going to be in a tough spot because they have their normal statutory and all those forms I mentioned earlier, not just the 8938, but that 5471, but your 3520, all the other information forms, they all carry a $10,000 or more penalty.
So yeah, here's the biggest surprises I think of people don't realize. Like people who are even aware, oh, I know of an FBAR. I know that international taxation is required. The surprises that people find, a mutual fund is something that requires, a foreign mutual fund is something that typically requires a Form 8621. That's surprise number 1. Surprise number 2, life insurance goes on an FBAR. Surprise number 3, life insurance is probably taxable either one of 2 different ways, usually, right? A 7702G computation.
Right.
Or sometimes a PFIC, which could be an 8621.
Yes, because you know, what's in a name? Life insurance in America and life insurance, let's say, in India or life insurance in France doesn't always mean the same thing.
It doesn't meet the statutory definition of life insurance in the U.S.
It's therefore, it doesn't have policy. It
doesn't have so it's not classified, so it's treated as an investment.
Yes.
So that's the surprise number. So that's the second surprise. Surprise number 3, foreign pensions are something that need to be reported, even if it is something that there's no tax due. Yep. And then I would say
at least an FBAR.
Yeah, it's then if there is an account with a value in it that it will require an FBAR. So surprise number 5, just because something is tax-free in the country in which you have it does not mean it's tax-free in the U.S. and chances are it's not. Right. Chances are that you actually still have to pay taxes. So that's a huge issue for our clients in India. A lot of tax-free products in India that people, oh yeah, this is a fantastic investment. Hold on a second there. Yeah.
Or even, I mean, your pensions, you know, your foreign superannuation funds, your EPF accounts in India, for example, your different either tier or pillar retirement schemes in Sweden or Switzerland. Those are all non-taxable to you as they grow, and then the whole idea is to incentivize you to save for retirement.
Yeah, right,
I mean, look, we have that here in this country, right?
Yeah, right.
We got 401ks,
yeah, sure.
we've got IRAs that grow,
Yeah.
and it's not taxed to you, right? So you've got interest generating maybe in your IRA account that you don't have to report on your income tax return, but the interest generated in your savings account you got to report on your tax return. So the whole idea is we're incentivizing people to save for retirement. But it just seems common sense. Well, why would you tax my money in my pension account? I'm not taking that money. That's not mine until I draw it out. That's kind of the mentality we have.
Well, there you go. There's your problem. Use logic.
Right.
That's what you don't want to do.
Well, the only reason why we think that's so common or so of course is because it's statutorily provided for. Those other accounts abroad don't meet the statutory definitions.
Right.
So you don't get this automatic common sense. Well, no, I'm not taxing my pension until I take the money out.
If you're a U.S. person, the U.S. tax rules apply to all your stuff around the world,
Square pegs and round holes.
That's what we're doing. We're so and just a great example is when we're dealing with depreciation, we don't go with say the German depreciation schedule. If you have foreign rental property, we use a U.S. You have to use a U.S. So that's a perfect example. So I think we should wrap it up here.
Sure.
And I think I got the close here.
Go ahead. Go for
so
it.
Here it is.
Yeah.
I would say this: any time is a great time to disclose your foreign assets with the IRS. Mm-hmm. Now is even better. That's pretty good, huh?
That's like the old.
That was pretty good.
I like the old proverb.
Yeah.
The best time to plant a tree was 20 years ago. The second best time is today.
There you go. Fantastic. Thanks for joining us, Parent LLP, IRSMedic, and feel free to subscribe for important tax updates.